Hello and welcome to another lowvarates.com training tutorial. Today we're going to be talking about the VA cash out refinancing loan. My name is James Shergill, government loan specialist with lowvarates.com. So let's start with the basics. What is the VA cash out refinance? It's a VA guaranteed refinance program for borrowers with existing mortgages or those in conventional, non-VA, loans with existing eligibility. Now, this is unlike the VA Streamline refinance, which is exclusively for borrowers that are currently in VA loans. These are full documentation loans, similar to the purchase loan process that you went through when you got the home. They're going to look at the appraised value, credit scores, income, assets, and debt obligations, all as a part of getting a clear picture of your eligibility for this loan. The VA will actually guarantee loans up to 100% of the value of the home, although most lenders right now, given the current market conditions, will not lend beyond 90%. You see, although the VA guarantees these loans, they don't guarantee the entire amount that the bank could stand to lose should the borrower default or be unable to make their payments. They usually guarantee a percentage of that loss, about 25% of the value of the home. Now, like the VA Streamline refinance, there is a funding fee associated with this loan. That funding fee goes to the VA to help fund the program and to help make these programs more accessible to other veterans to help them save money. So the way it works is if you're regular military and it's the first time that you're doing a VA cash out refinance, you have to pay 2.15%. Compare that to the 0.5% that you'd pay on a Streamline refinance. The percentage for subsequent use is going to be 3.3% if you do a cash out refinance after the fact. If you're a reservist or a National Guardsman, you'll pay 2.4% as a funding fee using it your first time, and 3.3% similar to regular military thereafter. Now, you should see the asterisk that's by the 3.3% here under percentage for subsequent use. It says the higher subsequent use fee does not apply to these types of loans if the veteran's only prior use of entitlement was for a manufactured home loan. Now, like the Streamline refinance, disabled veterans will be eligible for a significantly reduced fee. If you're a disabled veteran and would like some more information about that, please don't hesitate to give us a call. So what are the major benefits? So let's look at them. Obviously, number one is a debt consolidation. You're able to pay off credit cards, car loans, or any other high interest rate debts with a low interest rate mortgage. You'll be in very, very good shape. You can have a loan where you might be even raising your balance on your mortgage $20,000 or $30,000, but if you pay off an equal and commensurate amount of credit card debt, you're going to save quite a bit of money. You can use the money for a home improvement. Let's say you are looking to do an expensive upgrade in the home, or your family's getting bigger, or you just want to do some cosmetic upgrades to the home, either for future value or for just quality of life. There are competitive rates available, favorable terms, and no mortgage insurance. So I want to touch on the fact that there's no mortgage insurance on this as really being a benefit. On an FHA loan or a conventional loan, but let's stick with FHA for just a moment, any loan amount that's over 80%, generally speaking, you're going to have to pay an additional insurance on top of the normal homeowner's insurance that you pay to protect your home in case there's damage done to it, or fire, flood, what have you. Mortgage insurance isn't there to protect you or to protect the home. It's there to protect the lender. If you were to default on the mortgage, the VA is the one who is guaranteeing the loan. They're like your co-signer on this loan. They're the ones insuring the loan, and if you want to look at it this way, the only insurance premium you have to pay is that funding fee that's rolled into the loan. There's nothing out of pocket, and there's certainly no monthly premium that's assessed on top of that as there is with FHA. So that's another huge benefit. If you ever want to borrow over 80%, you can avoid paying that mortgage insurance by using your VA benefit. Another key factor that is great about this loan is that it allows you to take cash out, get a competitive rate, but it gives borrowers the ability to stay in a VA loan and still be eligible to take advantage of a VA Streamline refinance if rates should drop. Another great benefit is that because it's the VA who's guaranteeing this loan, you're going to get a little bit of extra consideration. Lenders like the fact that there is a hedge against their potential loss. It's nothing against any particular borrower personally. It's just that, especially in an environment like this, you might imagine lenders are wary to give any refinance, let alone one cash out, where they're increasing the balance of a borrower's loan. But with the VA backing the loans, these loans are actually going through. Now, some of you might listen to Susie Orman when it comes to debt management and debt strategies, or Dave Ramsey. Some of you may be fans of Robert Kiyosaki from the Rich Dad Poor Dad series. These financial wizards vary greatly on certain points when it comes to their strategy for handling debt and building wealth. But there's one fundamental golden rule that they all agree on, which I'm going to illustrate in this next slide here. So let's say you owe $10,000 and you can afford to make a payment of $250 every single month. Let's say you owed that $10,000 on a credit card. Now, the national average right now for interest rates on credit cards is about 18%. I'm guessing it's probably higher than that, but let's just say it's going to be 18%. That's lowballing it for sure. Looks like kind of a mean guy, doesn't it? You'll see why here in a second. It's going to take you 342 months to pay off $10,000 on a credit card with 18% interest assessed. Over the course of that 342 months, close to 30 years, you will pay a total of $24,423.30. And that means, of course, you'll end up paying $14,423.30 in interest just to borrow that 10 grand. So well over twice as much as you borrowed, you're going to be paying back. Now, let's compare that to putting that money into a home. Or in other words, if you were able to, say, refinance that money, this credit card debt, and put it into your mortgage, what that might look like. That same $10,000 borrowed at the national average interest rate right now. We're going to say it's 5% on a 30-year fixed rate loan. We can probably get you much lower than that, but I'm just going to be conservative just so you have a good idea. You'll be able to pay off this loan in 44 months. $250 payments on $10,000 will pay off this loan in 44 months. Over the course of that 44 months, which is just shy of 4 years, you'll pay out a total of $11,000, which means you're really only paying about $11,000 in interest for this cost of financing. This mortgage interest is tax deductible, so even though you're paying less, it is actually tax deductible, so you're going to get a benefit that you probably aren't going to get on the credit card, and you're really banking money in your home. I talk to a lot of people who avoid investigating, trying to get a better rate right now simply because they think the only thing available is an adjustable rate mortgage with the VA. Well, that may be true, but the hybrid is not like most adjustable rate mortgages. And I think if you consider that most credit cards are also adjustable rate type debts, if there's a chance for you to move that debt into your mortgage, I think the winner is clear. Having $10,000 borrowed on your mortgage is much more beneficial than a credit card, which of course would make the credit card the loser. So what do you need to get started that makes this a little bit different than a streamlined refinance? Well, you're going to need your most recent mortgage statement. That's going to allow us to actually verify the lender that you're currently with, verify your balance, and just verify the nuts and bolts that you're currently in. Also get an idea of what you're paying for taxes and insurance. The more accurate information that we have up front, the more accurate information we can provide you in terms of a quote. We'll need proof of homeowner's insurance, of course. Essentially what a refinance is, whether it's a streamlined refinance or a cash out refinance, is one bank agreeing to pay off your old debt in favor of a new debt. Well, they're not going to take on that debt unless they can prove that your home is properly insured. We'll need to see a valid state or government issued picture ID for all borrowers. So if there's a spouse, husband and wife, we'll need to see it for both of them. We'll need to see proof of the service ID of the veteran associated with the loan, as well as the Social Security number for any additional borrowers associated with the loan. We can look at a Social Security card or a military ID. Either of those will work. We'll need to see a copy of the mortgage note. We'll need to see a copy of the plat map or survey, only in Texas, Florida, or Ohio. We'll need to see your 2 most recent years' W-2s and or tax returns for all borrowers. Additionally, we're going to need to see the 2 most recent pay stubs for each borrower, and we'll also need to see the 2 most recent month statements for any accounts reflecting available cash assets of greater than or equal to 3 months payments. Now those are referred to as reserves. It gives the VA and the bank warm fuzzies to show that you've got some money set aside for a rainy day. Well, this is a great loan, and I think it's one of those types of loans that if you understand it conceptually, it's real simple, but you're really only going to see how meaningful a loan like this can be for you unless you give us a call and let us draw up a scenario that is based on your personal information and of course is as accurate as possible. This is James Shergill, Senior Government Loan Specialist with Your VA Pro, signing off. If you'd like to reach me, you can reach me by phone, 877-698-2482. Looking forward to hearing from you, and thank you very much.